Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Caesars Entertainment released second quarter 2023 results this week, and we're starting to see a slowdown in specifically the Las Vegas market. But there's a lot of dynamics going on here with Las Vegas and then the regional gaming market. So still a very profitable business, generating a lot of cash flow, but maybe not the same growth rate that we saw over the last couple of years coming out of the pandemic. But I want to dig into the numbers today. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And let's get straight to the results. This is the highlights for the quarter: $2.9 billion in revenue versus $2.8 billion a year ago. Net income was $920 million compared to $123 million a year ago. But that was driven by a $940 million valuation allowance against deferred tax assets associated with REIT losses. That's a lot of words. Basically, net income was down when you adjust for that one-time item. If you go down here to the segment summary, you can get a better picture of exactly what's going on. The adjusted numbers are actually adjusting for some asset sales. So not huge numbers that are adjusted, but that's what I'll cover here. Las Vegas was down 1% to $1.12 billion worth of revenue. Regional casinos, a little bit bigger business at Caesars, $1.46 billion in revenue. And digital was actually the one bright spot, up 42% in the quarter. On a net income basis, there was a significant drop both in Las Vegas and regional casinos, 16.6 and 15.6% respectively. Caesars digital did improve in the quarter, but still lost $22 million. On an adjusted EBITDA basis, which is really a proxy for cash flow that we use in the casino industry, I'm going to look at the 3-month numbers right here. $1 million coming from Las Vegas, down 6.4%. So there was a little bit of higher costs there associated with running the business. That's probably expected given the fact that labor costs are going up pretty significantly right now, and regional casinos dropped to 1% to $508 million. Overall, you get a little over $1 billion in adjusted EBITDA. The other thing that's always important for these casino companies is the amount of debt that's on the balance sheet. You can see right here, net debt, $11.6 billion, but there was $1.1 billion worth of cash and then added capacity on the revolver, which is $2.2 billion. So a lot of liquidity for Caesars Entertainment. The interesting trend here is really that the growth that we saw coming out of the pandemic, the record numbers in Las Vegas have started to reverse. That's maybe not all that surprising. People kind of went crazy when the shutdown was over. Las Vegas actually hit all-time record revenue in 2022, but it looks like that will probably come down in 2023. So this is an industry-wide trend we're seeing, not necessarily something that's just associated with Caesars Entertainment. The regional casinos, which also had pretty good results throughout the pandemic because there weren't quite the same shutdowns, there wasn't the same hesitancy to just go out and travel. They're starting to see flat results as well. But I would look at those as really just, we want those to continue generating cash, positive EBITDA. So right now, given the fact that there's less than $12 billion of debt on the balance sheet, a run rate of about $1 billion per quarter in adjusted EBITDA, I like where the company's sitting. It's really just going to be a cash flow business. Maybe you want to see that debt come down as interest rates go up, but really it's a steady as it goes quarter and business for Caesars Entertainment right now. Nothing too surprising, not experiencing the kind of growth that we would see from other companies in Macau. But what do you think of the quarter? Leave your comments in the comments section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.